Hi, I'm Chris Caton, Global Head of Research for Prologis. To help our customer and investor partners, we publish a Global Rent Index, which is a survey of the Prologis teams around the world. Our index covers 60 markets on 4 continents. So what does this survey work reveal? First question is, what does the survey show? Global rent growth was 4% in 2016, and that was led by 5% in the US. In Europe, net effective growth was 3%. Now, against a backdrop of just 1% inflation, real rent growth has remained very strong. This trend really matters. For customers that are only in the market every few years, rental rates have moved by more than 25% over the last 4 years, and that puts market rents at a record level relative to in-place rents. Now, a second question to ask is, what's driving this growth? Operating conditions are strong. Market vacancies have fallen to historic low levels amid positive demand and supply that has remained disciplined. Sentiment is shifting. Customers are increasingly playing offense rather than defense. They're on their front foot and willing to pay for space that works for them. Now, a final question. What are we seeing by market? Now, this is one of the key points from the survey, and it's a rotation in the growth drivers in logistics real estate. Early in the recovery, growth is typically driven by the unwinding of discounts from the recession. Markets that were hardest hit experienced the strongest recovery. But now we're seeing a rotation. Markets with higher barriers to entry have generated the biggest gains. In the US, for example, rent growth was more than 1.5% higher in high barrier markets as compared to the low barrier markets. Now, when we look at supply, it's been very disciplined this cycle. Yet there are a few outliers that might present an opportunity to secure a good deal, although the window of time to do so will probably be short. A few examples include Houston and Dallas in the US, Paris and Poland in Europe, and Singapore and certain markets in West China and Asia. Putting it all together, rent growth remains robust amid strong operating fundamentals. However, the growth drivers are rotating, and we've begun to see much better rent growth in markets with higher barriers to supply. For a full study, please see Prologis.com.